Welcome back to RVC Talk. So this particular video is targeting about MWD Magic indicator, how to use it effectively. Okay. So for this, I'm not going to use live chart or I'm not going to do any replay of old charts, but I want to show you like basically on a week starting at a first day. So basically, what are the different opportunities which you can easily understand and capture those? Okay. So first day of the month or the first day of a week. Okay. Let's start with for example, if we look at the December, December 2nd is the first trading day in this month. So when that happens, so this opens up. Uh, Here is a day high. Here is a day low. Day high, day low. Week high, week low. Month high, month low. These remains all same for the first day of the month, first day of the week and month. Okay. So by tomorrow, for example, okay, once the day completes, this monthly and weekly remains same, but the day will change. I will show that, and once the first week is over, next week, for example, 7th of December, month is not going to change. Week will change based on that previous week trading, and day anyway keep changing it. Okay, so it's basically, month level will not change for the entire month. Week level will keep changing for based on each week. Day, every day it will change. Okay, that's the basic understanding. Now, when it comes to the priority, so a week will have a higher priority, month will have a higher priority comparatively week. Okay, so if trading happening, let's not worry about the chart what I am showing, but generally the simple principle I am talking. Okay, if the trading happening above month, above week, above day highs. Okay, if the trading opens here, and then if it goes here, right? So when there is a clear cross, you can expect a strong momentum towards higher side. Okay, so that's a basic understanding. Okay, for example, okay, uh, talking about the low is not the right thing because the chart is here. But if trading let it open anywhere here, and if it goes here, you can expect some strong reversal from low of the day, week, and month. Okay. Subsequently, in any of the next charts, so when the trading happens, I will just explain so that the simple principles of some 4 5 basic rules. If you follow, this gives a perfect returns. Okay. Now let's look at the first chart. Right. It opens somewhere here, it opens here and there is a strong negative candle, but I'm pretty sure because of, okay, so you look at these three are here, right? Low of the day, low of the week, low of the month. Definitely this pulls the price like a magnet, we know that. So we didn't take any P here. The reason is, even though there is a strong first candle, here we see a reverse, a pullback here, right? Price goes down, but if it breaks, yes, blindly you can take PE. Okay, back to back candles, and then the price, there is no price rejection, then you can take the PE, perfectly fine. But when you see there is a rejection like this, that means there are a lot of buyers, and this is going to act as a strong support. Okay, so now let's look at when it comes here. This is actually acting as a magnet, but a lot of resistance here, right? Wait for a confirm. Always I use words confirmation, right? Back to back two candles at least. Usually, when we talk about in a long term, we talk about at least two 15 minutes candles, two 1 hour candles, right? But I say most of the time we do in intraday in 5 minutes, for example, right? So I prefer two 5 minutes candles closure is confirmation for me. Okay, so or if a 5 minute candle is closed and then the next candle breaks the high of that, is there also you can take consider it as a confirmation because whoever sellers are there will be cleared by the second candle. Okay, so here you see that lot of resistance here. So you need to better wait for the right opportunity. But when it goes down, again rejection, and you see some positive momentum. If you are you see, I'm talking about back to back candles is a good indication. But personally, even in a group, I recommend only a long after crossing this. That's don't get tempted. Okay, see, probably here if you see, this is 51,770, this is 51,860. There is 100 points. Don't worry about that. Okay, from here to here there is like 200 points. That's also fine, right? 770 to 890. But when you would have taken this, and if you didn't book, then this would have evaporated all the gains, right? So there is no need to get tempted about this 100 200 points. Okay, and if you see a strong candle like this and taking out of this level is a good clear indication. And if you see the back-to-back candles, right, the next candle, two candles are closed and which clearly are taken out the high is my strongest indication, and the level is cross second indication. And then you take a CE here with the stop loss somewhere here just below this one. Okay, and then if you see, this is 51,930, this is 52, close to around like 200, right? 52 or 170, for example. So there is like 200 points, like 200 and plus points here, right? In a simple trade, but 100% like, sure about getting a return, right? I'll go to the next chart. Okay. So this is on a December 2nd. So this is a December 3rd chart. And if you look at market opened here, yesterday closed here, right? Previous one. And this is week and month remained same, and the day changed, right? It moved a little upwards, right? So this is my first point, and this is the strongest support point. Okay, this is the first candle of the day, and you see a month and week support. You don't need to get tempted. See, market anyway keep giving a lot of opportunities, right? Wait for a confirmation. Sometimes if it breaks, then we can see somewhat, but you see a clear upside movement, and we know that it's a positive tone. And once this crossed, right? So the day level, it doesn't matter this day, this day, this day, this day. These are extended levels. You can actually disable it so that you get only one set of the levels. But once a day crossing this, you can blindly consider a C. I would say that, like, 100% sure shot confirm things. I say that blindly you take a trade, right? With a stop loss somewhere below this candle, or wait for one or two candles and set your stop loss somewhere below this candle, right? You might have taken the trade here, right? We don't take the trade immediately this, right? Once the close happened this, you take a trade based on this, or you can take a trade here. 100% back-to-back candles close here, so you can confidently take it with a stop loss below this previous candle low, right? And then you ride it, right? So here 52,400, 52,600, right? This is a line. See, your first target is here, right? If you would have taken, like, let's say you look at like 3-4 lots, right? You book at least 1 or 2 lots here and ride the remaining other 2 lots, right? And then the next target is here. Once it crossed, you bring the stop loss somewhere here, and probably it hit the stop loss. That's okay. But when you see a reversal here, you can consider. But I would not have taken this because I don't see back-to-back 2 candles here, so I don't get tempted here, right? And 2 candles, I know that probably it may hit this line, but yeah, maybe that day I didn't take the trade, so I don't recommend to take a trade. I would have taken a trade only after closure above this, but here by the time it reaches, it's 3 o'clock, so I don't usually take any trades after 3 o'clock on options. Okay, so you will understand the way I do the trading. I recommend the same. Okay, this is on December 3rd, and this is on December 19th, because when you see this kind of an upside and downside, I want to give you a little more information. Okay, the trade is happening above the high of the week, right? And the monthly high is somewhere at the top. Okay, so if you see this open somewhere here, which is above the high of the day, this will give a strong support. You see a closure above the day of the high, above the day of the high. The 2 back-to-back candles is my confirmation. I would have taken the trade in this candle and ride the wave with a stop loss. This candle closed here. The stop loss you set it somewhere below this, and then you keep moving the trailing stop loss, right? 2 of these probably, out of 4 lots, you would have booked 2 lots, and then continue to go with other remaining 2 lots. and it would have hit this one, right? But when you see a reversal here, it's up to your potential whether to hold it or exit. Okay, I don't recommend when to exit because that depends on your capability. But I suggest in the group also a possible trade. You go ahead and take this, and probably there is a good opportunity, right? And you can book 10 points, you book 20 points or 50 points, it depends on you. So when you go back here, it is not able to cross. There are two candles closed below, but green. So probably, we would have waited for some more time, right? That is where we talk about the volumes. That is where we talk about the trend change, right? So other indicators, other confirmations, we will talk separately. But how this indicator works is basically when you see a back-to-back candles close here, you take a PE, or if you are not sure about this, here back-to-back candles close below the line is a confirmation to take the PE. Okay. Now, 21st November, and market opened above the monthly. See, here I am enabling a weekly VWAP and daily VWAP also. This is the high of the week, this is the low of the week for that month, and trading opened somewhere here. Straight away, it break high of the week, daily level, and VWAP also. A PE is very clear here when this breaks here, unless it goes across this one. But here you see a reversal, and because this acted as a strong support, and don't take CE unless you get a double confirmation. This has to be crossed, this low of the week. When you are in the below, trading happening below low of the week, that is not in between, low of the week, low of the day, I don't recommend to take a trade anywhere here towards the CE. You can always question me. You see a back-to-back candle, right? 49,800 to 50,000 here, almost 200 points. Why do we need to miss out, right? It's okay to miss out some opportunity rather than getting into trouble, right? So, but when a low of the week, low of the month, a low of the day, you see a nearby below that, don't take the trade because there is a high probability of rejection. But here, yes, you have an opportunity, but we would not take it because the target window is very, very small, right? You see a reversal here, rejection here, but a strong reversal candle here, back-to-back candle close. I would have taken this trade in this candle and wait for this to ride. Okay, rest of this is a flat market. There is a rejection here, there is a rejection here, support here, rejection here, right? I would not consider anything on that. Now let's go to the next one, right? Market opened here, right? So you don't look at the rest of the part. First, look at the first two candles, right? First candle crossed above this is a good opportunity because see, one thing is previous day to this is a good upside. Momentum is towards the positive side, right? And don't think that, okay, if it cross here 51,000, it will reverse here. Yes, it may reverse, but don't ever take PE when the market is going up. See, people say that don't trade against the trend, the same funda, okay? So if you want to take a trade, you take in the same direction because market, if you look at overall, it's a positive trend. It opened above the high of the week, above the high of the day. Blindly, you can take a CE of somewhere here, right? With a stop loss of somewhere here. And then this the rest of that you can see it in the chart. Okay. These levels will act as a strong support. You see a resistance, a support at these levels. Okay, so let's go to the next. It opened on the negative. Look at the first candle. You know that it's on the negative trend. There is no need to explain anything, right? So there is a strong rejection at 52,560. There is a rejection here, right? You would have taken, after seeing this second candle, you would have taken a PE and you would have booked this one. And rest of this is all within the line. So if you don't ever get tempted by seeing, okay, rejection, two back-to-back candles, you see the width here. Okay, you see 1 and 2 and one more is a good opportunity to take a trade. But if you see here 130 to 200, only 70 points gap here. I would not recommend it to take the trade when you see a small targets like this. Market previous day and then opened here. which is a positive note. Next candle is taken out the high and also cross high of the day, right? No second thought. It's okay. A stop loss below this, even if it is like 20, 30 points below this or 50 points below, sometimes it's okay to take and then ride the wave. When you see a first rejection, right? See, this one to here is only 100 points. From here to here, 120 points, something like this. So your target cross this in a swift move, you raise the stop loss and bring the stop loss somewhere here, right? When there is a rejection, one, two, three, you would have exited and you see back-to-back candle rejection, take the PE and sit tight. It's okay if it bounce back here. Maybe it will hit the stop loss. Or no, I don't want to take a trade. Wait for this line to cross. When you see like this, I think we all know how to take trades. We don't need to worry too much about double and triple and five levels of confirmation, right? When you see a rejection here, breakout without even any support, you take a trade here and then you rate that one. Okay, what happens as a small investor, we all, right, including me, is when we see 10 points profit, we are in hurry to book. When we see 10 points loss, we want it to come back to minus 8, 6, 4 and then get into positive. What actually happens? Market will take it to 10, 15, 25, 45. Right? That happens with everybody and not only with you or not only with me. Okay. So that is where I always recommend to take a stop loss. It is okay if it hit the stop loss, you get another opportunity. Okay. So don't ever wait for that to recover. It's okay. We take a trade when it is coming in the right direction. Again, we can do a re-entry. But don't miss out this kind of a trade. Don't get into when you see a fast move like this. Put a 10-point profit and put a stop loss. If you would have got an entry at 100, okay, let's say the price here is 50 to 600. If you would have taken 50 to 800, which is let's say 500 rupees. Okay, so 500 you got an entry here and it already moved to 525, 535. You wait for that to move, right? You just put a trailing stop loss if your broker supports. If not, at least you put 510, 515 and let it ride for some time. Or manually you need to keep raising it. Or what happens in the hurry, you just book it here and you regret the entire day. I would have waited for some more time because we don't do re-entry with the fear and we feel bad about that, right?